Homebuilder sentiment dropped 3 points to 39 in March. It was the lowest level in 7 months. The homebuilder ETF underperforming the S&P 500 index. That's down 6% year to date. Joining us now is Michael SVHO, chairman and CEO of luxury real estate development and investment firm SVHO. He joins us here on set. It's great to have you. Welcome.
Thank you. Great to be here.
What is you're in key markets around the country, and you're in office, you're in other types of real estate as well. What is your sense of, more broadly, the commercial real estate market right now?
We're seeing the market really, as it's been for a while, separate to two segments. You have the super prime, the luxury segment, which is booming. It's been booming and didn't take a big hit after COVID. And you're seeing the commodity market, which took quite a big hit, particularly on the office. B office and C office has been suffering for a while. You're seeing a little bit of recovery there. But with where cap rates are and where interest rates are, they're going to have a really hard time recovering from kind of the post-COVID trauma of people working from home.
You've made some very big bets, and bets when other people were running away from office in recent years, including Transamerica Pyramid in San Francisco. We had Kathleen McCarthy, the co-head of real estate at Blackstone, on about a month ago, and for the first time in years, she was saying that they are constructive on certain types of office property at Blackstone. How would you assess that market right now, and how are you seeing that play out in places like San Francisco?
So we bought, probably $5-6 billion worth of real estate just at the beginning of COVID. Interest rates were low. You could borrow money fairly cheap. And we bought super prime assets like the Transamerica Pyramid. We own 3 buildings on Fifth Avenue in a moment where everybody thought that office is gone and people will never work from the office, right? What you're seeing today is full recovery as far as the work from home that's totally gone. Trump has put a mandate that federal workers have to come back. In San Francisco, the mayor, Dan Lurie, has made employees come back 4 times a week. So we're seeing that forced or voluntarily, people coming back to the office. Now, what you're seeing at the super prime kind of top of the market is that if you're creating office environments for companies, for their employees to come to, they will come, they'll lease more space, and they'll pay the highest number. And that's what we're seeing. And I believe that Blackstone is understanding that now. They're seeing the facts kind of as they transpire. San Francisco, just to finish with that, vacancy is still at 30%. At the Transamerica Pyramid, we're at around 12 or 13% vacancy. So you can see that at the top of the market, at the right type of product, tenants are coming in. Obviously, rents are double or triple what they were pre-COVID.
Here's what surprises me about what you're telling us about the San Francisco market. You say AI companies make up close to 20% of requirements, most of which are early stage. If you had told me 3-4 years ago that the market was going to come back, I wouldn't have guessed it would be the startups in an area like AI, which is supposed to be, to some degree, replacing people and supposed to be attracting coders who you want them to be anywhere in the world, not necessarily in prime real estate in San Francisco.
So KPMG just came out with a great report about San Francisco and about employment. So 90% of CEOs believe that San Francisco has the best talent pool for tech, and AI obviously is part of that. 75% of those CEOs said that in the next 12 to 18 months, they're going to increase their commercial footprint. What you're seeing is, yes, we all think AI is replacing people, but there's people that are needed in order to develop AI. You see OpenAI just rented, I think, 500,000 or 600,000 square foot. And as you said, they're taking a big part of that market share. 20% is a big share of that industry. But when you look at the investment side, right, 20% of all investment in startups are in San Francisco. I think almost $60 billion were invested in the last year in San Francisco startups. So it's not only the AI business, it's the startup industry itself is all driven by talent.
So is this healthy, or is it just a huge amount of money that's still available from the VCs from a little down south on Sand Hill Road to allow them to do this, and it's not going to last, perhaps?
I think it's the exact opposite. It's just the beginning. I mean, AI is when you talk to the AI firms, it's only the beginning. We're seeing the growth is huge, but it's like the beginning of the internet, right? When you speak to people in the industry, they'll tell you that where AI is where internet was, 20 years ago. So I think we're underestimating the power of AI and the power of the growth and how AI is going to impact commercial real estate. That contradicts the fear that everybody thought computers are going to take over and we're all useless.
We got a Fed decision this week. We know interest rates continue to be elevated here. Now you've got immigration crackdown on illegal immigration under the Trump administration. You've got tariffs starting to be implemented on certain things like steel and aluminum, higher tariffs. What does that mean for building some of these big projects?
So I think it affects more the commodity market. So if you're a home builder, you're building private homes and with small margin, high volumes, it's a problem because you're in the McDonald's business, right? You have to do a lot of volume with very little margin. Here we're looking at there's a short-term pain and I think long-term growth in general in the market, but at the higher end where you have larger margins because you have much higher income, much higher rents, or much higher sales prices. Yes, it's going to affect the market, but it's not going to affect it how it affects the rest of the commodity market. So I think we're confident at the top of the market. There's going to be some short-term pain, mostly because of the unknown. I think the unknown is scaring people more than the reality of what's going to happen.